What's up, everybody? Welcome back. I'm going to be going over the index today. We're looking at the NASDAQ futures. I'm probably not going to get into the S&P because it's the same chart. The title of the video is, what am I selling? I'm selling out. What should we sell? Should we sell? The answer is absolutely fucking not. If you're close to retirement and you're watching this video, you should have probably already allocated into a safer position, a little bit heavier into bonds and stable cash because we were at a very high point in the market. And if you're close to retirement, you probably shouldn't be watching this video at all. You probably not. Don't give a shit. This is for younger investors, people who have a career ahead of them, even, a decade, 5 years or so from retirement. There's absolutely nothing to be worried about right now. We are in a natural, healthy correction in the market. So we're going to go over the chart real quick. I'm going to keep it short. Looking back at last year, I'm going to put on a weekly candle. Remember, we talked about the correction from, not the correction, but the panic from COVID and the lockdowns and all that stuff. That's the gray oval. We talked about buying there. If you did, just an index fund, or you should be well over doubled your money. So it's, and depending on stocks and things like that and what you invested in, you should have, it was hard to lose money these last 12 months. It was, people talk about how they lost, or they're stupid. They're not. The indexes did so well. If you just did an index, you would have had a 70% year. Like it's stupid. So anyways, I don't want to get off track. Now, from this time, we put a few weeks in, we put a regression channel, one deviation. So you're looking at, here is the natural support. Here's the mean. Here's a natural resistance on the channel. It shouldn't break it. It shouldn't ever, especially from the point when you put it on, it shouldn't ever come close to touching it. You're just mainly looking at the mean. Okay. So on a bull market, you're looking when it's below the mean to be buying, things like that. And basically keep accumulating, your paychecks, your 401ks, whatever. You're trying to keep accumulating in this channel. Now, what's important about today, and really this week as a whole, is we have lost well below the mean on the on the regression channel. So let me zoom in here. What you're looking at from there is a natural, healthy. It's fine. It's a lot different than the COVID sell-off. I'll tell you that. We have a natural descending triangle pattern starting to unfold here. Okay. Now, the next thing on the chart is the Fibonacci retracements. The Fibonacci retracements, you basically start at the bottom of the last sell-off and you ride it to the top. So we put it up there at the high. Okay. You just click, you put it on the chart. I have videos on it. You put it on the chart and then you're looking for retracement levels. So this is very good. I'm not saying this is the bottom, but this is very good that the NASDAQ is trying to respect the first fib level. So it has. Down here near the 12,230 level. Look at this big wick right here on the 4 hour. It respected the hell out of it. It lost it for a minute and didn't confirm. I thought it was going to confirm and we were going to go ahead and go to the next, but it's showing, it's almost up 1% now. It's showing great respect for this first fib level, which is great. I don't think it's going to hold it. I think it's going to eventually lose it, but it doesn't matter. So what you should see is this natural descending triangle it should lose the next fib level, or this fib level, the 23% fib level, the next one. Okay, it should form kind of a descending triangle pattern. We're looking for it to break. I've started a dotted line here. That's just more or less, we're looking for it to break and confirm that dotted line. This is the downtrend, the descending triangle pattern right here. So we're looking for it to break it on a one whole daily candle and confirm it. But it's got a ways to go, and I don't think it will right now. So we're looking for it to keep firing down, looking for the next fib level at 38%. Okay. That's another good level to accumulate, but you got to see it, respect it, and then break this downtrend. Okay. What hopefully happens is what I'm predicting is the golden ratio, obviously on the fib level right in here, the gold box I've put. Just under 10,000 is where I would accumulate. Obviously, if we're showing support and bouncing back, I wouldn't do it if it's just free falling through it. Okay, if something crazy is happening, but I don't know if we'll get here. But if it does, that is the great level to start accumulating back on indexes. Maybe start allocating back, if you're younger, allocating back heavier into the stocks, a little bit less out of bonds. But it also depends on other things, man. Looking at the yield, looking at what the Fed's doing, looking at other studies, and seeing, obviously looking at volatility, seeing kind of where we're at, and then making the best decision for yourself to accumulate more. So again, this is for younger investors, not older people closer to retirement, but this is for people who want to get back into the market. Okay, so that's these levels. Now, if we lose these levels, that is when you really have to kind of forget. So again, that's the levels. I'll go quickly into some of the studies if you're interested on the chart. Basically, we have volume. We have the blue. The blue is the open interest. You don't have to really worry about that. The yellow, you can barely see it right through here, is the average volume. We've had above average volume for a while. People are either buying a lot or selling a lot. There's a lot of uncertainty right now. So that's the volume. We're looking at RSI. RSI is actually showing, the bottom on the daily at least right now. So we'll see if it respects that and breaks this downtrend. Again, the dotted white line. TTM squeeze, you don't have to worry about that too much. That's really looking for squeezes and wedges, breakthroughs, or breakouts up or down. So we're not really looking for that. Volatility is obviously going to be a little bit higher. We have a high volume, a lot of selling pressure. So volatility is better for, I use, it's on my chart because this is I think I'm selling a day trade chart, which is, which I need naked options. I do naked options. So implied volatility is a must have on my chart. So you can ignore that, but that's what we're looking at, man. So I just wanted to share that again. Selling nothing, not selling one thing, not freaking out. This is a good correction. I've been waiting for this. People who know me, I've been saying like, God, we need this. I want this to happen so bad. I want it to go another 30-40% down. That'd be beautiful for my retirement, for my wife. It'd be great for us to accumulate at these levels. But if we break back up and we confirm upside again, it's still a good correction that was good for the market. And we would stay inside the channel, which is even healthier. So you look here, we bounce off the channel. Just pretend I'll just do the line here. We go back up and try to break highs. So don't think that'll happen. I think there's a lot of uncertainty right now in the tech industry and things like that. And I think we might lose the channel, but I'm watching it closely. I'll keep y'all updated. If you want to look at any of the videos, feel free to. If you have any questions, comments, concerns, feel free to put them in the comments below, and I'll get to everybody. That's all I got for y'all. I appreciate it, and I'll catch you on the next one. Thank you.